All right, hello everyone. Doug with thelinkedlist.com. I want to welcome you back to another weekly edition of Stock Market Mutterings, where I will try to find you some quality trades throughout the week that hopefully will make you a little bit of money. This is for the week ending on April 15th, and man, dude, we got some stuff we got to talk about here. We're back at the crossroads. We're right back. It's like, you guys ever seen the Blair Witch Project? It's an older time movie. It was like when they first started shooting movies, everybody thought it was a really cool movie because it was shot on a VCR camera. And it was like this scary movie. Anyway, back to what I was talking about, the Blair Witch Project. They go all around, they're lost in the woods. And they go all around the woods and everything. And they're gone for days and they think they're finally out and they just made one big circle. That's us. The market is the Blair Witch market. I know that's really exaggeration, but let's talk about it. Because what I like to do in all seriousness is talk about the previous week, the stuff that we did good, the stuff that we did bad, and then try to see how we're going to build on that as we go through this week. Now, the issue was that 200-day moving average. We left off right there with it last week because if you look down here, it was just pinned all of last week down there at that 200-day moving average. And as soon as Monday opens up this week, it just pops right through it. I mean, it just goes right on through that thing like it's not even in existence. And it's just like, okay, well, what's next? Are we going all the way down to the 250s? Are we retracing back to August? What's the next move here? Now, the market got a little bit of a bid there. And the next day on Tuesday, we started to see a rally where everybody was kind of thinking, okay, the 200-day moving average has held. That's the short term. I was thinking that we're probably, the case had not been made that we were not going to get down into the lows of, what is this, 2.9 here, the 2.9 lows, which is 252. That's kind of what I was hoping was going to happen there on Monday, that once we started selling, that we would go down in there, wash everyone out, stop everyone out, and then start to see a really significant rally. Well, it come up a little bit short of that, and then Tuesday you start to see a rally, carries over to Wednesday, which was a really strong day. It starts out like that on Thursday, tries to rebuild on Friday, and then just like game over. This trade war thing came out again, more problems with that. It's the dark cloud right now that's over the market, and down it goes. And, by the time Friday was over, we were just almost right back down. I think we might have just touched it just a little bit or just sunk right below it again. So you go 3 days of a rally in the market, and then one day just almost completely cleans that out. You're back down at the 200 moving average. So what's the point? The point is we're still dealing with this damn 200-day moving average. That's still the theme. So when Monday comes around, you got to ask yourself, are we going to hold this thing? Are we going to hold it or not? Because I think the better play here is to just get rid of it. You've been parked down there, I don't know how long, it's 2 weeks. I don't know exactly what day this is right here, but man, you've been there for 2 weeks at least. Yeah, the 23rd, 323. So look how long it's been just hanging out around there. I think it needs to get out there, retest, capitulate, retest 2.9s to get a solid bounce. But, as long as these trade war things are going on, it's going to take some time for the market to shake it out. Now, do the trade wars really mean that much to the market? Who knows? But the market, it's always something. That's what we were always talking about when the bull market was going up every day, is something's going to come by. That's the nature of life. You had the Fed chairman saying you'll never see crises in our lifetime. We'll never see retracements, pullbacks, corrections. That stuff's a thing of the past. No, it's not a thing of the past. This is human nature. It doesn't matter. It'll shrug. The market will shrug off things that look obvious, and then it'll react to things that are stupid. And that's just the stock market. But all we can do is deal with what's in front of us. And right now, to keep this simple, this 200-day moving average, better hold early on, or I don't see the case that has been made yet for the bulls to tell us that we're not going back down to February 9th. We might not, but I have not seen the evidence yet, so we shall trade accordingly. Now, when I look at a few stocks, one of the ones here, I'm going to give you some short ideas, and then I'm going to give you some long ideas. Now, one of the things I want to say before, because this is a special kind of market mutterings, okay? Everything, oh, I spelled that wrong. Everything is subject to change. These ranges are so magnified right now, and they're so touchy. Like, you saw some great breakouts. I'll give you a great example on this one. Netflix, this is not the only one I've seen this week, but definitely something that we were working on in the trade room, something I tweeted about. You know, you get a nice breakout, washes out into the 50 moving average, and it just hangs out there for like an hour or two, right? And it starts building this nice little wedge right here. Just building, building. Market's going down. Netflix doesn't care. Doesn't care. So it's just building and building and building. And then all of a sudden here later in the day, it's like, damn, it's going to break out, you know? Market starts to turn around. And it does. It breaks out right here. You can see the candle. It breaks out. And then the next damn candle, it just goes from $2.95. The damn thing doesn't stop till like $2.86. It's like a $10 reversal. So what I'm saying is you see a lot of stocks that are building, they're consolidating, and they're giving you this idea, like, okay, they're going to break out. And they do, and they just go pop, and then whoop, it's just like, damn, they're coming right out of the screen. So this is what I'm talking about, subject to change, because, damn, these things aren't holding. And maybe this better idea is to short this stuff on some of the pops. So light, I want to look at light. Now light's down here. This is one of the stocks I wanted to short. It's close to its 200 moving average. This was one that was just like MU that had just been running and running and running, 46 to 70. You're bear flagging down here on the daily chart. You're at the 50 moving average, very close to the 200. Market weakness continues. This thing will probably end up down at 50 by Friday. Right? 50 by Friday. Now we might bounce. We might go on this 4 or 5 day, all week long melt up binge, and this won't be worth a damn. I'm willing to accept that. But I think when it comes to longing, there's other stuff out there that would be a better long than this. I'm just looking for that. If we break this low, we were already at it today. But we start taking out 58.24, you start seeing volume there. I like this short from 58 all the way down to 50. I also kind of like shop a little bit. You know, same thing here. I think a lot of these stocks are longs and short. You know, when I did that video just a couple of days ago, the thing I like to look at is that 50 moving average on the daily chart, separating good from evil, bullish from bearish. And, you know, this chart's under it. Shop is underneath of its 50 moving average. These are all under their 50 moving averages. They're bearish charts. Yes, they can bounce, but if you know, you can look for bounces as they get down towards the 200. I mean, damn near every one of these stock charts look the same. They're all kind of bear flagging. And they're probably going to follow the market. If they can hold their 200-day moving averages, they can hold on the bottom of the support of those bear flags, then maybe you get a rally if the market participates. But you got to be in freaking scalpers mode, because you may buy something like this and then you get 50 cents and you don't take it and you turn around and you're $18 in the hole. So if we go lower, pay attention to the 180 area as support for a bounce. If it starts fatiguing anyway, this actually might be a short all the way down it. Now, one I'm a little bit more open here is OLED. OLED's a damn short. OLED is just a freaking short. No matter what this thing, it was going down before the market started going down. The market just isn't doing this thing any favors. I don't know what the situation in here is, but it's under every single moving average, 10, 20, 50, 200. You know, if there was a loser moving average, it would be under that right now. Now, maybe that's unfair to OLED, and what I'm going to say might be unfair, but it kind of reminds me of that MCP and GoPro, those old former momentum runners that just took off. You know, remember those? They just went and took like $100 from like 20 to 100, and then they're back down to like single digits now. And I'm not saying OLED. I don't want to scare you if you own some OLED. Just it looks like one of these charts because you're in such a long-term downtrend. I mean, this thing has not been thrown a bone since January. How many? Look at the daily chart at the bottom. What do you got? A dozen green days since the beginning of the year? This is a mess. Anytime that you can get a pop on this, it's a short. You're probably going to end up at $90, $85 or whatever here pretty soon. But especially if the low, I mean, when the market rallied, the thing only bounced a few bucks, and then it got an upgrade on Friday. That couldn't even make it through part way through the first hour of trading before that got sold off. So that one there. Also, another name we've been talking about, the Babs. Baba. Look, it's already under its 200, and it's just sitting there. It's just like, this is bear flags paradise. I haven't traded bear flags in eons. They're not really one of my favorites still, but these are the levels. And here's what I'm saying about all these stocks. When I'm saying bear flags, if the market's going to continue to go down here, and when I say, you can see the market going down, but that's not, let me give you something a little bit better than just the market's going down. If the rallies can't sustain themselves intraday, like, the market always takes off. takes off sometime during the day. But it hasn't been able to hold its initial run up. Like, you know, you were used to that going up, then it would pull back 20 cents, hold, run up, pull back 20 cents, run up. You know, you're not getting that. You're getting, you know, a couple of bucks up, a couple of bucks down, a couple of bucks out. I mean, really wild ranges and choppy. So if you're going to be weak, you got a stuff like Baba here. It's probably going to go under 166. It's a short. If you can find some supports there, market strong, maybe it bounces back up to the 200. So you got a two-wayer there. And the same thing with NVIDIA. Now, NVIDIA itself hasn't gotten close yet to its 200-day moving average. I think this is far and away the better short play out of them. If you look at this little area, let me put this, I'll just put the alert right here for you on the screen. 230.95. I just see this thing coming back to 230.95, which was February 6th lows. This thing has not gotten out of its own way either. It's like what OLED looked like a few months ago. So look at this one. I mean, that's what I got. I got the market, I got Netflix, Light, Shop, OLED, Baba, NVIDIA. Hell, Tesla will probably be in there. That thing's got a mind of its own. The point I want to make here with it is, yet again, we're right back where we were last week. The 200 moving average is still the crutch. If you can hold on to that and it can have some establishment around there, then there's a possibility you'll get a multi-day rally. If you continue to have those early rallies take off and be sold viciously, this is what the tape is telling you in real time that you can't see on these charts, is that every time the thing breaks out, it gets sold off. Like people are just waiting for a green bar to slam it. I mean, here's NVIDIA this morning. You look at it, it goes straight up, and then immediately it TPs or A-frames. This is what we call it in the trade room, just like a TP, Indian TP. It's like up and down. It's like an A-frame house. It's like up and then just completely gets clocked, wiped out. It's like, that's discouraging. People are going to they're going to give up on buying those if that continues to happen. Well, it is continuing to happen. So I like this one here. We'll see. Again, you're in scalper mode right now. Until this market can settle its volatility down, you went from no volatility to too much volatility. You got to kind of bring those down into a happy medium, okay? So you just kind of have to trade through it. If you need help, visit thelincolnlist.com. Trade with us live. Until the next stock market muttering, take care and trade well.